Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Wednesday, the 12th of May, and we have James Whelan, Managing Director of Amfex, the Australian Mutual Funds Exchange, as our guest today. Now, James, as always, great to have you on the show.
Bonjour, Brian. Comment ça va?
So coming out from Sydney, but with a little bit of French there. Now, James, the first thing I've got to ask you is, we're having the G7 meeting happening right now. What are we looking at, and what are some of the key takeaways so far?
It's interesting, these two main stories that are coming out. First off, we've seen US and China relations a couple of days ago saying that potentially this was going to be Joe Biden's chance to push for more of a decoupling. Decoupling is the word of the day, just incidentally. So you take a drink if you hear that phrase today. The decoupling away from China, more of those two economies happening, the war in Ukraine splitting things, and obviously with the ongoing battle between these two countries for trade and military supremacy around the region, over Taiwan as well. I could go into that all day. We're not going to do that. But what the chance that Biden had was potentially to do that. However, we have seen a reach out between two senior diplomats of China, and I'm going to do the names right. Jake Sullivan from the US side and Wang Yi from the Chinese side have met, and it does seem to be cooling any tensions that are between the two before the G7, I think, kicks off properly. Actually, when it needs to sort of kick off, it's next week. I think it starts actually on the 19th. It could be, but I don't know if you've got your dates there. But that sort of has seems to have cooled it, which again is positive for stocks. We're going to see that Chinese equities are going to be directly related to the tensions between China and the US. There's no other thing around it. We're also seeing, Brian, that Janet Yellen, just a little while, maybe she didn't get the message from the State Department, but I thought that she was supposed to be a pretty good representative of what they do. She's called on G7 countries to do more against China, or not against China, but in combating their influence. And that's something that's a very interesting sign. Maybe get a message that maybe that wasn't the right thing to say at this particular time, depending on where they want it to head. But all eyes are going to be on whether they're going to be taking this opportunity to separate themselves further from China, or work in the best interest of both countries, and there are amazing benefits of both countries working together economically.
And so here's the key thing as well. Given the slowing global economy, it is, and if you look back to 2008, the world basically recovered off the back of a Chinese growth story.
GFC was saved, and we were pulled out of the GFC from Chinese influence, or that Chinese buying of things, this Chinese promotion of the economy. That is true. There is more to be gained from these two countries working together than there is in them being apart. That is the simple fact of the matter in these two. Now, the next thing that I wanted to talk about with regards to that is that the more tensions that there are with China, you will see Chinese equities decrease, but the money flow, remember, always look at the money flow. The money flow out of China has to stay somewhere in the emerging markets region, has to stay somewhere in that region, and India will be the best beneficiary of any tensions that escalate with China. So China goes down, India will go up. The money flow that goes from Chinese equities into Indian equities is clear. That has been shown and will continue through that. So there's the trade that you can have with going those two countries. Just going, if China comes off, if there's more tensions, then India is absolutely more of the buy. It's usually a buy anyway, so that's okay. But you're going to see more money flow going to the Indian side.
And we can already see that. I mean, we've seen that in the last 2 or 3 years in particular, in terms of the supply chains out of China, the manufacturing supply chains moving over to India. Foxconn and Apple being an example of that happening. But
Right.
On the flip side of the equation, James, we also have still challenges in India. We've just had two Adani companies being removed from the MSCI index just then. Talk us through that, and what sort of implications has that had on the short term in terms of investors' lens on the Indian markets?
There are some the Adani research that came out by Hindenburg it feels like only a few days ago, but it's actually a couple of months ago, that was on Adani was scathing. It seemed like a lot of it had a lot of basis in reliability, and I'm going to do that without being sued or anything like that. But it seemed like there was some of it was actually quite believable. Some of the auditors probably not. I mean, a company like Adani probably should be using one of the big four auditors and not a 3-person shop somewhere. That sort of came up, but it's a big telltale sign now that MSCI is taking Adani Total Gas and Adani Transmission out of their Indian index, and that's coming up at the close of trading on May 31. That's a telltale sign that they're not wanting to know much about that. Just there's a lot of backing behind this Adani thing. Now it's just Hindenburg, and it's just Adani. That's the best that we can say. That's the best that we can say. If there's more contagion, or if there's more of a trend that other Indian companies might be, then absolutely there's going to be a bit of a cleanup, and absolutely there's going to be risk on investing in that country. So that there's just that little step that's coming out now that's just going, is the Adani way the Indian way, or is the Adani the one-off that we just need to what's the word? Just sort of separate from the rest of the stocks.
Okay, and we'll leave it at that. Then, is it just Adani, or it's just the Indian market as a whole? Thanks, James, for your insights. Thanks for coming on the show today.
Not a problem at all, Brian. Have yourself a good one. Have a great weekend.
Thank you. I'm Brian Fernandez, and we've been speaking to James Whelan, Managing Director of Amfex, the Australian Mutual Funds Exchange, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our website, www.biztech.asia, as well as the syndication partners, TV stations, radio stations, and websites for this content. Thank you very much for tuning in.